Really, what excites me is the ability to invest in what you know, right? The fact that there's a multifamily complex, a mile up the street that I drive by every day that just went up for sale.
The majority of people trade time for money in the hopes of building wealth. I'm here to tell you that the traditional methods don't cut it anymore. Welcome to the Passive Income Power Podcast. My name is Doug Earthman. My partner Mickey Bernstein and I are going to dive deep into the power that passive income can have on your quality of life. We're going to discuss alternative assets, strategies, and insights through interviews with the very people who have found freedom through their power. I hope you enjoy this episode of the Passive Income Power Podcast. All right, thanks for tuning in to the Passive Income Power Podcast. My name is Doug Earthman.
And I'm Mickey Bernstein.
And we've got Steve Maldonado here from New View Trust. Super excited to have him on this week's episode.
Yeah, guys, thank you so much for having me.
Thank you. Thanks for being here. Folks, one thing that we've been really trying to stress to people is looking to get into the world of investing of alternative assets is that you may be sitting on capital that you don't even know about. And the average investor may have $50,000 cash position available to them they're not even aware of, but they're thinking, I can't participate. Now, what if I were to tell you that you may be able to use that capital from all kinds of sources to get in the game?
Today, we are going to go over some of the insights and advice from Steve about self-directed IRAs, self-directed retirement accounts. Some of you may already have one, but if not, we're going to go over how to get one, how they can be used to grow your retirement funds through alternative asset investing.
Okay, thanks. So, Steve, why don't you introduce yourself and give us a little background and tell us how you got started in real estate in this world and what it looks like today.
Yeah, well, guys, thank you again so much for having me. I'm so excited to be here speaking to your tribe about, real estate, retirement, and the power of choice, really. Real estate has fundamentally changed my retirement, the lives of so many of the individuals that we've worked with, and through their knowledge and the power of choice, I'm happy to be here, and again, kind of sharing my story and what we do. So I'm the Director of Syndication Solutions for New View Trust Company. We are a passive IRA custodian, custody IRAs, 401ks, ESAs, and HSAs for alternative asset investing. More specifically, my team deals with the real estate investor, the capital raiser, and the syndicator, helping to be a resource for their investors wanting to use their retirement funds to invest in their deals. And so, it's really a great and interesting story about how I came to know New View and kind of got intertwined with them. And so if you'll indulge me, I'd love to tell you a short story. So I was 18 years old, and I was gifted a $15,000 Roth IRA from my father, who had set that up for me. And over the course of a short time, been able to contribute and save that for me. Again, on my 18th birthday, was gifted that, and as a naive novice kid, didn't know much of what to do with it, right? And so, of course, like any buddy my age, I went onto the internet, started looking for ideas what to do with this money, right? And of course, kept coming across the standard stocks, bonds, mutual funds, right? All the standard securities that are available to us, and really fell right into that, right? It was easy, it made sense, it was what was out in the marketplace. Through my research, I do recall reading an article. To this day, I don't remember exactly where the source was, but about how you can invest your retirement funds into real estate, right? And at the time, again, didn't think much of it, was just looking to get started, managing my own portfolio and what that looked like. So again, indexed most of it, put it in the S&P, and really didn't think much of it. Fast forward, I finished my degree in finance, and was really looking for some different opportunities. Shortly after I graduated, I had a baby boy, Stephen Joseph, and so was looking for a place to live, essentially. At the time, there really wasn't much opportunity or options available to me. However, I got hooked up with a gentleman at my church who was a prolific real estate investor in the area. He's a landlord and happened to own a condo that just became available for rent. Well, anyway, I started talking to him. He showed me the condo, and after a week of thinking about it, decided to move forward living here. Anyway, we started going through the lease. He started explaining to me that the process for paying rent would be slightly different than what I'm accustomed to. That it's writing a check just like anything else, but that I would have to write the check out to his IRA. And so I scratch my head a little bit and I say, David, what do you mean I'm making this check out to your IRA? But at the same time, the light bulb goes off in my head that I've read about this before. Here comes that article that I read 4+ years ago about using your retirement funds to invest in real estate, and sitting across the table from somebody who's doing it. And so naturally I'm curious. So I started to kind of pick his brain, what that looks like. And, kind of after getting to know his story, he owns 7 properties in the complex that I rented from, or rented in rather, and several more beyond that, all in his IRA. And so he started telling me the story about how, again, real estate had changed his retirement. And of course, my eyes started getting brighter and bigger, and, my mouth started, salivating more and more, and I wanted to know more. And of course, it excited me because I had that nest egg, right? I had some capital to invest. And so it was exciting. So anyway, he told me about real estate options, and I got started investing in real estate options, grew my portfolio, grew my wealth, and now I invest as an LP in real estate syndications, a little bit more passively, through my portfolio. And yeah, anyway, so long story short, it's fundamentally changed my retirement to invest in real estate. And, I was cutting my rent checks to NewView. David connected me with NewView, and the rest is history. And so, again, it's been a great ride here. It's really been like drinking from a fire hose, learning all the ins and outs of the industry. But once you come to terms with it, it's not that complicated, and especially with resources like yourselves, these podcasts and everything else, we're hoping to bring a little bit more awareness to what we do and how we can help people.
Well, that was an incredible story, Steve. I appreciate that. It's always it's fun when the light bulb goes off, and having those life-changing moments. So just in general, can you give us a overview of self-directed retirement accounts?
Yeah, great question. So the IRA, the individual retirement account, was created in 1974. The first one opened in 1975. And long story short, self-direction is really just a marketing term, right? Which refers to the account holder's ability to direct all of the activities within their account. When you go to a Charles Schwab or Fidelity or one of the big brokerages, right? You open up a self-directed IRA with them. The problem with them, the limitation with them, is that you are limited to whatever menu of stocks, bonds, mutual funds that they offer to you. What we do is allow our clients to diversify their portfolio outside of the stock market, investing in what they know, right? Like real estate, cryptocurrency, precious metals. They can even loan their money, really anything that the IRS does not prohibit. And we'll talk about that, I'm sure, here in just a second. But again, in essence, a self-directed retirement account is that retirement account which you direct the activity for. You make the investment choices based on your knowledge and your ability to identify deals. So anyway, but the tax advantage is the same, right, as any other IRA or 401k that we're working with. And the advantages expand, again, with your ability to diversify into things that all while reducing the negative burden of taxes.
Thank you. What are all the other kinds of investments that people can make through your company with a self-directed IRA?
Yeah, great question. So really, you're limited to only what you can find out in the marketplace, and anything that the IRS doesn't prohibit, which gives you thousands and thousands of options. The IRS does not allow you to invest in life insurance, the infinite banking thing and all of that other stuff. No, you cannot get that started through an IRA or any of the means there. And then collectibles. Like artwork, baseball cards, and there's specific reasons for that. We're not really going to, dive too much into that. But really, those are the only two things that the IRS prohibits as far as as far as investments, right? Now we can kind of expand on what that looks like as far as, disqualified parties, right? And those are individuals who you are not allowed to invest with, right? And those include your lineal ascendants and descendants, right? Your parents, grandparents, children, grandchildren, and without getting too granular, that's kind of what dictates, the specific investment requirements. But other than that, you're really open to investing in real estate, cryptocurrency, precious metals. We're seeing more and more people loan their money and do private lending nowadays. But alternative assets, again, are those outside of the stock market, not those standard securities like stocks, bonds, and mutual funds. That said, a firm like ours is a passive custodian, so we're not there to, really provide financial or investment advice. You are, as the investor, there to do your own due diligence. That's kind of the self-direction, and we're more of a facilitator. And so I guess that would be the only key difference, right, between an account managed at a brokerage like Schwab, Fidelity, or otherwise, in that self-directed account. But really what excites me is the ability to invest in what you know, right? The fact that there's a multifamily complex, a mile up the street that I drive by every day that just went up for sale, and that I can go out and I can pool capital with limited partners, right? And raise the $3 million or the $5 million it takes to buy it, acquire it, add value, and exit, right? And drive by it every day and know, hey, look, I own that. I did that. And in other cases, in a more passive case, just knowing and having that relationship with the operator, somebody that you can call on and check on the investment, right? You can't do that with Apple stock or Microsoft stock, right? You can try, but I doubt if if you don't own a significant enough portion that they'll talk to you. But I guarantee you that GP, right, that syndicator, that fund manager will pick up the phone, talk to you, tell you all day about the performance of their fund and how things are going, right? Because they want you to continue to do well with them. So
you mentioned some of the restrictions investors have with investing their retirement accounts, investing with lineal relatives. Can you expand more on that? Like what are some of the limits and why?
Sure thing. So if you think about your family tree, right? The lineal ascendants and descendants that I spoke about make up the trunk of the tree, right? So again, those are your parents, grandparents, children, grandchildren, right? Anybody that falls along the trunk of the tree. Brothers, sisters, aunts, uncles, all of those parties are there and allowed to do business with, right? And so the IRS prohibits you from doing business with those lineal ascendants or descendants to really protect the IRA, right? All investments have to be made for the benefit of the IRA, and the IRS, in essence, wants to prevent any misdoings or any self-dealing within that IRA, right? Or any sweetheart deals that may be associated with renting to a friend, a family member, or otherwise. And so they do prohibit those lineal ascendants and descendants. But like I mentioned, anybody on the branches of the tree, as in your uncles, aunts, sisters, brothers, cousins, whomever that is, are all prohibited to invest with you.
Could you explain in this self-directed IRA what the process is for us and for investors to work with you?
Yeah, certainly. So the process is fairly simple. Most investors that come to work with us have a previous employer 401k or an IRA that they've been contributing to at a brokerage like Charles Schwab or Fidelity. The first step is to establish an account with their IRA custodian like NewView Trust. Those accounts can be established fairly quickly. Once the account is established, we would then request a transfer of funds from wherever they're currently being custodied, whether that's the brokerage or the 401k plan, the IRA or the 401k plan. We would go through that step with the investor. Once the funds are transferred into NewView, they're then open for your client's investment. And so, for the investor. And whatever investment they would like to make, whether that again be in private equity, real estate, precious metals, cryptocurrency, or private lending.
So, Steve, we refer a lot of our investors to you to explore SD IRA, self-directed IRAs, and retirement accounts. You're our go-to guy. Explain to our audience how going with New View Trust, working with you can create a streamlined process for ourselves, the syndicators, and our investors.
Sure thing. I mean, really what separates us is the relationships that we have with the syndicator and the capital raiser, right? It's knowing the product that they're selling, kind of inside and out, with the purpose of process, and making that streamlined for the investor as well as themselves, right? And so, really formulating that relationship, going through the process of onboarding whatever offerings, they have out in the marketplace and that they're getting investors, placed into, having that on our platform well in advance of those investors being referred, getting that into our system, and those who need to know aware that those investors will be coming through for those investments. We have a private equities team that deals with all private equity real estate investments, and so getting them through that process is of course a crucial step into streamlining the process for the investor once they're referred. And then we've done our best to digitize the process and make everything as painless as possible for anybody that's coming on board with us, to get their application completed, get that account funded, as I said, and then get those funds placed into your investment.
Okay, thanks, Steve. So what are some of the best practices or unique strategies that you're seeing investors use?
Yeah, that's a great question. So, I mean, many of the investors that we work with are busy professionals, right? They're really looking for places to park their money. And so there's nothing, too creative about the strategies that they're employing today. A private equity real estate syndications, is a great place to put your money today, right? Especially for that busy professional that wants to collect passive income, that mailbox money, so to speak, right? And exit after, that 5 to 7 year hold, with 1.5 to 2 times their money at the end of the day. And so, real estate syndications are definitely a great way to go with your money. And then, you mentioned, Mickey, about your SEP, right? And so just to kind of expand on what that is, that's a simple employer pension plan. That's a plan for small business owners that have, employees. It's a retirement plan that allows for higher contributions than that of a traditional or Roth IRA. In addition to the SEP plan, there's a solo 401k plan for solopreneurs, as well as a simple IRA plan. And, really those are creative strategies that people are employing. So, it's too much information to talk about all on one podcast. We'll, bore people to death if we talk about all the ins and outs of that right now. But it's definitely something that, I urge everybody to look into, you can, the solo 401k, for instance, right, has a contribution limit of $66,000 with additional catch-up contribution after the age of 50. And so you can really maximize, that contribution above and beyond what you can in a traditional or Roth IRA. And that, not only allows you to put away more money for your retirement, but also lowers your taxable income. And so, those are great strategies for any high income earners to kind of, lower their taxable income. If your spouse owns more than 5% of the business with you, they can make the same contributions to that account as you. And so you can almost double that contribution. And so, again, there's a lot of different strategies, but again, it really comes down to a matter of situation, risk tolerance, and what people are looking for. As I mentioned, real estate syndication is a great way to get started. Do it passively with not having to worry too much. And then furthermore, I would encourage, any of those small business owners, anybody that qualifies for those plans that I just mentioned, to really look into what they can do, through those accounts.
So to touch back on that again, so unique, those strategies seem like they may be beyond a typical financial advisor's realm. Do you help your clients, people that open up accounts with you? Can you help strategize on some of those things, or do you not touch that kind of stuff?
Yeah, so that's a great question. So we're a passive IRA custodian, and under the rules in terms of our charter, are not fiduciaries. We're not able to provide financial advice. We're not CPAs. We're simply a custodian. So, in a traditional sense, when you think of a custodian, you might think of the guy that cleans up the church or the school, right? But in essence, a custodian is that person that takes care of the assets for somebody else, right? And so that's what we do. Our clients hold alternative assets with us. We process paperwork, do the reporting to the IRS, and more so act as a facilitator for our clients' decisions and investments. So no, we don't provide financial advice. It's just not something that we're allowed to do. But we do have tremendous resources, very, very, excellent resources in that matter, whether that be, certified financial planners, CPAs, or other professional services that we've, worked with for a while.
Gotcha. Well, I appreciate that. That's, when it comes to all of this there's so much strategy that goes into it. And when you're just learning it, it's hard to know what to do and when to do it, where to do it, and finding resources to tap into can help that direction. What are some typical mistakes that you see investors make when using their self-directed retirement accounts?
Yeah, absolutely. I mean, it's just jumping in, too fast, right? And also, making the mistake of, not working with the proper IRA partner, right? This is something that, definitely over the last 10 years has more awareness than it ever has, right? But by all means, having a partner that's been in it, has gone through it, has lobbied for legislation around, is definitely, something that I encourage. Obviously, by all means, it's a self-directed retirement account. That's a self-direction. You can go on Google, you can do some research, and you can, open up an account by yourself, but I would take the time, spend some time talking to a qualified representative, an IRA specialist. We get certified in these things, and through our years of experience, can offer a lot more insight than what Google, ChatGPT, or any of the other, resources that may exist today can offer. And so, again, just, educate yourself as much as possible, just like anything else. But really, try to form that personal relationship with a preferred IRA custodian, somebody that you can trust, and somebody that, has been out in the marketplace for a while. And, not to toot our own horn, but Newview's celebrating our, 20th year in business. And so we're very excited about that this year. We are pretty much plugged into, thousands of these educational platforms. And so we're very excited to be kind of launching, some new endeavors and what that looks like for Newview. But we do have a YouTube channel and we have a social media presence, and all of that is focused really on educating the client, right? On self-directed retirement accounts, what that looks like for them. And we do discuss various situations. We have, real world examples. We have webinars from authorities in various asset classes. And so, again, just really finding those resources and, taking advantage of what is out there is highly encouraged.
Well, thank you. And I'm sure you that the government changes the rules from time to time, and you alert your clients that they need to do something a little differently when the time comes. So they have you to look out for their best interests.
Absolutely. And that's what we're there to do, right? We're there to be that resource, the subject matter expert, right? Again, we do toe that line, and try not to, step past what we are and aren't allowed to do. But we're always there to service others, right? And help our clients in any way that we can. And so, of course, understanding the situation helps better, in that. But yeah, absolutely. That's one of our core values here at Newview, is again, service to others. And what that means to us is really educating others, like I've mentioned, several times, on the power of choice and what that means to them, investing in what they know, and really reducing the negative burden of taxes while doing it.
Well, I know we got some people listening to this podcast that have never done this before and are probably very interested by now. But if someone started from scratch, what guidance and advice do you have for them?
Yeah, absolutely. So, some of the deals that we talked about, as I mentioned, it's a progression, right? So I started, investing in real estate options, quickly progressed into, investing as an LP in certain deals. I got very lucky, in some of the deals that I did early on in my, real estate investing. That gave me the nest egg to be able to move on to, bigger and more passive investments. And so, starting off, all I would say is you need to start, right? You need to start start somewhere. I think many people are, get that anxiety, get that bug of, oh, it's only $6,500. What am I going to do with it? Well, I know what we're talking about here today, alternative asset investing. Some of them do require a little bit higher minimum investments, but, get it out there, get it to work for you, put it in a money market, put it in, an index fund, earn 5%, for a short time, until you can identify something. I mean, there are opportunities in these alternative asset classes with lower minimum investments, $10,000. You can in 2 years, 4 years, become that LP, or that contributor in the fund, whatever that looks like for them. But just, getting your money into a protected vehicle like an IRA, and then putting it to work for you in some fashion, grow that nest egg, and then be able to move into bigger and better opportunities. And just, really understanding, just like anything else, that it's a progression, right? It's like the Chinese bamboo, the bamboo seed, right? It takes 5 years for the stalk to break out of the seed, right? But it only takes 45 days for that stalk to grow over 9 feet tall. And so, it's more so just, kind of continuing to water it, and that slow progression until, you have that nest egg to move on to the bigger and better things.
Yeah, there's one other thing that we, for people just starting out, I know a lot of people have switched jobs at some point in time, and when they have a 401k at their old job, go to a new job, a lot of times those go into a self-directed retirement account, and a lot of people forget about those. And there's quite a few people that I've talked to about joining an investment, and when they hear about self-directed retirement accounts, they say, oh man, I've got, X amount of dollars from this job I left 5 years ago, and it's just sitting around doing nothing. So having the ability, if you have made some job changes, switch careers, to roll some of those old 401ks or that may already be in a self-directed IRA into some of these alternative assets.
Yeah, great point. And as I mentioned, that's really where the bulk of our clients come from, right? They have these previous employer 401ks that, by whatever means and situation, they forgot about or just didn't know how to use, and it's nobody's fault. I mean, I talked to a woman the other day who, unfortunately lost her husband. She had these means, but she didn't know what to do with it. She just wasn't financially savvy. And so she allowed this retirement account to sit dormant for 11 years. And it was quite a substantial amount of money that she had in that account, and was doing, some small calculations in my head with some of the partners and the opportunities that we've seen over the last couple of years and how much money she could have, she just left on the table, not investing that. And so, that sadly is the story for many. But the point is, do something with it now, if you're aware, right? The fact is that you can roll it over, and the process for that is very, very simple. Again, getting out in the marketplace and trying to identify some opportunities, like in the real estate syndications, like with 2D investments, beforehand, obviously will benefit you in the long run. But yeah, that's where the bulk of our clients come from, are those that have that previous employer 401k and want to roll it over into a, traditional IRA, try to diversify their portfolio, and leverage, those retirement funds versus personal cash.
Good stuff, Steve. If people want to get in touch with you, how can they reach out to you?
Yeah, thank you, Mickey. So our website is newviewtrust.com. My team can be reached by emailing syndication@newviewtrust.com or giving us a call at 407-305-0675. As I mentioned before, we are plugged into all social media channels: YouTube, Facebook, LinkedIn, Twitter, TikTok, you name it. So find us there for more educational content, and our contact information as well. We're there to be your resource and your educational provider. So please, if you have any questions, feel free to reach out to us or get connected to us through Doug or Mickey.
Steve, we can't thank you enough for spending this time with us. And I want to come visit you in person sometime. Folks, we thank you so much for tuning into this episode of the Passive Income Power Podcast, and we want you to let us help you find your passive income superpower. Good night.
Thank you, guys.
Thank you for watching the Passive Income Power Podcast. We hope you gained wealth building insights. I will ask you to do 3 things to help us serve you best. Go to our website at 2dinvestments.com, click on Investors Club, and fill out the basic information to have timely access to new offerings. 2, follow us on Facebook, Instagram, and LinkedIn. And 3, feel free to set up a call with Doug or Mickey through our website. We would love to help you find your personal superpower.